They were going to have to be fixed with printed money anyways, but we're going to get there sooner. Now, what that means for stocks, I have no idea. I think that people, buying the S&P and Nasdaq at these levels are idiots that think that it's just going to get smoked. Because you look at what happened in 2008, once you start printing money in this sort of collapse, the markets don't necessarily automatically respond. There's a little bit of a lag between what happened. So I'm extremely bullish. Again, I use no leverage. We've been, buying dips. We think Bitcoin dominance is going to continue, which means that, ETH and all the other shit coins are going to struggle for a while. But, I think we could get back to 70%-ish level on Bitcoin dominance. And then if you get a ripping Bitcoin market, then we get sort of the explosion in alt season. And I think because ETH has been the most hated layer one, probably the most hated mega cap crypto of the last cycle, it's probably poised to perform the best in the next leg up. So I'm extremely, on a risk reward basis, bullish on ETH because everybody hates it.
The crypto market doesn't wait. It reacts faster than any other asset class to shifts in the macro landscape. And right now, Bitcoin is flashing signals. As the Federal Reserve's aggressive tightening cycle approaches its final stages, many believe we're standing at the edge of a major monetary turning point. According to top industry insiders, digital assets could be the first to move, and move big. Historically, Bitcoin has shown hypersensitivity to central bank policy shifts, and this time looks no different. But there's a twist in the playbook. Former BitMEX CEO and crypto OG Arthur Hayes is sounding the alarm and the opportunity. In his words, Bitcoin doesn't wait when it comes to changes in monetary policy. As we near this pivot, he's doubling down on a low-risk, high-conviction strategy. No leverage, steady buys, and full confidence in Bitcoin reclaiming market dominance, potentially pushing back to 70% plus of the total crypto market cap. But here's where it gets interesting. While many altcoins may struggle to keep up in Bitcoin's shadow, Hayes sees a hidden gem, Ethereum. He calls it the most hated megacap of the last cycle, a coin that's been overlooked, written off, and buried under wave after wave of skepticism. And in markets, when pessimism reaches extremes, the biggest reversals often begin. So, what does that mean for the next alt season? If Bitcoin leads the charge, Ethereum could quietly flip the narrative, emerging as the dark horse of the next bull run. The signals are building. The macro backdrop is shifting. And once again, crypto is positioning itself ahead of the curve. Up next, we're bringing you clips from Arthur Hayes' latest interview, where he lays out his thesis, market outlook, and why Ethereum could shock everyone in this next cycle. If you're enjoying this breakdown, smash that like button. Drop your thoughts in the comments. Are you stacking ETH or still all in on BTC? And don't forget to subscribe and enable notifications so you never miss the next deep dive on crypto's fast-moving future. Let's go back to the interview.
This is a seminal moment in global markets history where you have China attempting to regain its top spot as a top economic power that it had pretty much for the entirety of human civilization, apart from the Industrial Revolution in Judeo-Christian America and Europe. And that system negotiating how it's going to sort of coexist together in this new reality that we have in 2024. And so what Trump is doing is not his own idea. It's an acceleration of something that was going to happen anyways. And this, blunt force terrorist weapon that he's wielding is sort of the catharsis that we've been waiting for. And, yesterday, obviously we're recording this on, I guess, Tuesday morning in Asia. Markets opened in Asia like down 5%, Nikkei down 6 or 7, HSI down 10, CSI down 5. And then sort of we had this relief rally in the US overnight. I woke up and everyone was like, oh, yeah, just rattling off the different countries that have bent the knee to Trump. Oh, Japan's going to do whatever it takes. Vietnam's going to do whatever it takes. And which is, part and parcel of his plan, right? I'm going to roll out this massive tariff number on big bad America. And you guys are going to come and you're going to bend the knee. You're not going to retaliate. You're going to do what I asked you to do, whatever that is, right? But again, this isn't about Vietnam and Mexico and Canada and all these other countries. If you look at the the massive dispersions between who finances the world and who builds the things. It's America and China. It's all about what is the new agreement going to be between America and China. And I don't think that Xi Jinping can bend the knee to Trump, because that would essentially mean that China is going to go back to 19th century Ming Dynasty, where they had drugs sold to them by the British. They had trade treaties enforced upon them at gunboat. And he's going to do that again, and obviously a less violent mechanism, this tariff thing, and just agree to the big bad white man who tells him he's got to change his economic policy for the 1.4 billion people that he represents. So I just don't think there's a deal that can happen. I don't think the markets recognize that yet. We're still in the denial phase. Oh, China just makes cheap shit that's really bad. That's what, Americans and lots of people in the West think. Environmental degradation, child labor, ethnic cleansing, all the same tropes that you can read in every single major Western newspaper. And I just don't think that China, Xi Jinping, can sit there and take that abuse and say, okay, great, I'm just going to reform my whole economic system so that, if the American side does better than they have done over the past 40 years. And so ultimately, I think that results in China finally running an independent monetary policy, which they really haven't done since, 1949. It's always been tethered to the US and a basket of other currencies, which has put them in a situation where they have a balance sheet recession, they have an overvalued property market. They purposely popped that bubble because they felt it was not great for the rejuvenation of China to essentially finance the building of a bunch of worthless apartments. They wanted to build stuff. But again, they had to deflate this asset class. It's caused a massive economic dislocation in China. The response is to print money and let your currency depreciate. They're printing the money onshore, but they're not letting the currency depreciate because, again, I think both sides want to find a deal. I honestly think that neither side will be able to find the deal that works for their domestic populations, and the result will be CNY, the Chinese yuan, at 8, 9, 10, 11, some level like that, so that it allows China to do what it needs to do, which is print money, fiscal spending, monetary easing, quantitative easing, and let the currency depreciate massively, which is obviously very good for crypto. But that's sort of the framework that I'm operating under. We're not there yet. Both Xi and Trump are putting out the "I want to do a deal" feelers. I'm sure there'll be some sort of like jamboree meeting at some point. And everyone's like, "Oh yeah, China and the U.S. are going to find a way to coexist economically in this new system. The markets are going to be rallying. Ultimately, there won't be any deal, and then everything falls apart again. And hopefully, by that point, Bitcoin ditches this correlation to the Nasdaq, and we sort of can outperform in a meaningful way on this global reflation and sort of decoupling of China and sort of the Western ecosystems. So that's kind of how I'm looking at it. I think all the sort of noise around Vietnam or whoever just going and doing a deal, great. Japan's going to do a deal. Vietnam's going to do a deal. Bangladesh is going to do a deal. Who gives a fuck, right? Unless China's coming to the table and bending the knee, then, great. The S&P, I think it's up on the day right now, but that's just a bear trap.
We're standing at a critical crossroads in global markets. China is pushing hard to reclaim its status as an economic superpower, but the landscape has changed. And Trump's tariffs may be speeding up a long-brewing confrontation between the U.S. and China. While allies like Japan and Vietnam might align with U.S. policy, the real showdown is with China, and President Xi isn't backing down. The chances of a clean resolution? Slim, and that tension could spark a massive economic shift, one where cryptocurrencies, especially Bitcoin, emerge as long-term winners. The U.S., after decades of outsourcing, is now facing the consequences: rising inflation, supply chain vulnerabilities, and what some analysts fear could be an 80 to 90% devaluation of the dollar, especially when measured against hard assets like gold and Bitcoin. Meanwhile, China is dealing with its own storm: a collapsing property sector, deflation risks, and a weakening yuan. To avoid economic stagnation, both superpowers may be forced into the same playbook: money printing on a massive scale. And that's when things get serious. When traditional currencies start to lose credibility, investors look for alternatives that aren't tied to political agendas. According to Arthur Hayes, this is where crypto, and especially Bitcoin, steps in as a lifeboat in a sea of fiat volatility. As both nations head toward reflation and currency debasement, Bitcoin stands apart. Decentralized, transparent, and immune to central bank manipulation. Up next, we'll show you exclusive clips from Arthur Hayes' latest interview, where he explains why this global power struggle could mark the beginning of a new era for Bitcoin. If you're tracking the macro signals, hit that like button. Drop a comment. Do you think Bitcoin will become the ultimate hedge? Don't forget to subscribe and enable notifications so you don't miss future deep dives into crypto and global market trends. Thanks for watching. Let's dive in.
I mean, I guess we don't know, but at the end of the day, if you think about it from the United States perspective, they're going to do the similar thing to China, right? China was reflating a balance sheet recession due to a property market bust and sort of over build out of certain things, right? And they're going to fiscally and monetarily reflate, and the balancing factor is the currency. The United States has a different problem. Shipped all of its manufacturing overseas so that stock shareholders can make a bunch of money over the last 50 years. And it's not like the US can't ever make a battery. They just didn't want to do it because it was really expensive. Well, okay, let's just, bring all that production home, inflate the currency. The dollar goes to shit. Now, maybe not against another fiat currency, but against gold and against Bitcoin, we're talking 80, 90% devaluation of the dollar. In nominal terms, it'll be fine. And so then, okay, maybe over 5 or 10 or 15 years or whatever the time period is, the United States can make a battery just as good as China can make a battery. And then it just comes down to everyone else's ideological and geopolitical decision of who they want to trade with, who they can trade with, security agreements, all that kind of stuff, which we can't really predict. But we do know that both systems have a problem, and neither system wants to deflate their system and then rebuild. It's okay, we're going to take it where it is. We're not going to completely disenfranchise all of the capital holders or the politically connected entities. We're going to print a bunch of money, and our currency is going to deflate against the hardest currencies in the world, gold and Bitcoin. And so I think that's the message. We can quibble about like who trades with who, but it kind of doesn't really matter because both systems are going to use the same mechanism to get to a similar sort of goal, which is why obviously I love crypto, because I don't have to worry about earnings reports and does a CEO go to the right dinner parties and are they supporting the right political faction in each, you have Elon Musk cutting the US government, but then 50% of Tesla's production capacity is in a Shanghai factory. You have Trump is going against China saying, fuck you, I'll put another 50% tariff on. How does Elon feel in the palace right now? Right. So like he's
not in the palace anymore. He got kicked out of the palace there, I think. I don't think he liked that either.
So I don't know. It's trading stonks is hard. I fucking skip to Bitcoin. And I know the response. The response is printed money, devaluation of the dollar and the yuan against oil, gold, Bitcoin. That is the only answer, unless you want to essentially deflate your system and then rebuild it, which no politician has a stomach for because they won't be reelected or supported anymore. I am obviously extremely bullish on crypto, and even the pretty short term. I haven't been able to do enough research, but I believe there was a closed door Fed meeting yesterday. Obviously, I'm sure to talk about market movements. There hasn't been a statement out about it yet. Before I got on this recording, I took a look at the MOVE volatility index of the bonds. It's at 135, which is pretty much where it was in September of last year when Powell decided to cut 50 basis points to help Kamala Harris attempt to win the election because of some other issues in the global monetary system. So we're on the cusp of central bank intervention. I haven't taken a look at the they'll come out in a few hours, the fix for the yuan this morning by the PBOC. But offshore yuan traded as high as 7.35, which is probably a 5-year high in terms of USD CNY. Are they going to jack rates internally in China to bring that back down to strengthen the currency, or is China saying, you, Trump, I'm just going to start this devaluation that I had to do to reflate my economy. So I think that yes, it looks a bit bleak and all these sorts of things. But again, what do we know is true? They must print money, they being anyone in charge, because they do not believe that they need to retrench and have austerity measures and cut spending to a degree to rebalance the system. Therefore, I think this is basically accelerated the start of the, as Raul Paul say, the banana zone, right? Because if we didn't have this tariff thing, we would have limped along. I don't know how long it would have taken. We would have gotten to the same place. I guess it would have taken a much longer time. But Trump, for whatever reason, has said, I'm going for it. And this tariff thing is forcing us to realize the faults in this system that we're going to have to be fixed with printed money anyways, but we're going to get there sooner. Now, what that means for stocks, I have no idea. I think that people, buying the S&P and NASDAQ at these levels are idiots that think that it's just going to get smoked. Because you look at what happened in 2008, once you start printing money in this sort of collapse, the markets don't necessarily automatically respond. There's a little bit of a lag between what happens.
Despite ongoing global trade tensions and persistent market volatility, Bitcoin is still on track to potentially hit $1.8 million by 2035, according to market analyst Joe Burnett. This bold, long-term projection holds steady, even as investor sentiment is rattled by geopolitical uncertainty and shifting economic landscapes. What fuels this optimism? Burnett points to Bitcoin's technological edge and its growing credibility as a financial asset, with the potential to eventually surpass gold's $21 trillion market cap. And he's not alone. Arthur Hayes, former BitMEX CEO, shares a similar view. He believes that if the Federal Reserve returns to quantitative easing, we could see Bitcoin skyrocket to $250,000 by the end of 2025. For both analysts, Bitcoin's volatility isn't a weakness. It's part of its evolution into a mature global asset class. While short-term uncertainties remain, from inflation pressures to monetary policy shifts, Bitcoin continues to prove itself as a resilient hedge during times of economic stress. Just like gold historically benefits from rising uncertainty, Bitcoin offers a digital alternative with unique advantages for long-term investors. Hayes emphasizes the growing need for decentralized, non-sovereign assets, especially as traditional economies flirt with massive money printing, debt accumulation, and currency devaluation. In that context, Bitcoin stands tall as a future-proof store of value. Both Burnett and Hayes remain strongly bullish, viewing Bitcoin as not just a speculative play, but a strategic asset in a changing global order. And as Ethereum gains momentum, some wonder, could it become the next breakout leader in the upcoming alt season? Now we want to hear from you. Do you believe Ethereum can take the spotlight in the next cycle? Or will Bitcoin continue to dominate? Drop your take in the comments below. Smash that like button if you're stacking sats or ETH. Share this video with a fellow investor trying to navigate this macro mess. And don't forget to subscribe and turn on notifications so you never miss our next deep dive into the future of crypto, markets, and money. Thanks for watching.